Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, January 31st, 2012 is sponsored by RealTick. Alright, let's get right into the mix, folks. Markets again are trending lower today. We had a nice little gap up this morning on optimism about Europe, but that faded very quickly today. And again, we're seeing this change in character, and I want to talk a little bit about the change in character to you guys today, which again tells me that you're still looking for a pullback, a continued pullback. And again, just to refresh your memories, going back to last Thursday, this was my pivot top that I gave out to all my members here at InTheMoneyStocks.com. As the market hit that level, we shorted the market. And again, you might wonder how I know that level is key. Well, again, it's partially proprietary, but the easy answer that I can show you guys is to go to your daily chart, zoom out, and you can see clearly there's a gap fill right here, which was tagged at that exact price level. And then if you go zoom out even further and you go back to 2007, the highs in the market, and you take that pivot high, connect it to the 2010, or check that 2011 pivot high, and you get that exact level as well. And again, those two levels that coincide, and this is the key, folks, when you can have multiple levels giving you a certain price, you are basically locking yourself into a 90% winning trade. So again, patiently waiting, looking to short that exact level. The markets get right there, right here on an intraday basis. You can see it even better. And sure enough, the markets flush from there. And even today, even though the markets continue to see some selling off of that level, even today, you saw a gap up in the markets, and the market just couldn't hold the gains. And that continues to alert me that the market is looking for another move down at some point in the not too distant future, based on the fact that it's overbought, based on the fact that it's underpricing not only the European situation, but also the effect on the U.S. economy, which I think has really definitely been underpriced. I mean, everyone thinks the U.S. economy is all going to be fine, everything's going to be good, but remember, the European economy, as it collapses and continues to collapse, is going to affect China. As it affects China, it affects the whole world, including the U.S. So we've had some good strings of economic news of late over the last couple months. Today, consumer confidence started to drop. Home prices continuing to drop. The economic news today was not good by any stretch. And again, the market's on light volume gapping up, but quickly selling off. Now again, what's interesting here, yesterday, for instance, the market floated up all day long, coming back to the flat line. Today, we started to float right around midday, and then we saw some more selling come in here. So I'm very curious to see where we end the trading day today. I think that will give us another basis to go on. But again, bottom line is we're holding our short positions. We've already taken some profits just to give you guys a sense of the current calls out there. BOM, my partner, gave out to Research Center members at a price of $10.50. He nailed the exact low on this ETF to the penny as a long play. We picked it up, and today it hit first target at $11.50. That's basically a 10% return since last Thursday. So what is that, 3-4 days? 10% return. You can't beat that. And we took half the position off the table. We put a break-even stop and let the rest run. Let's try to make 20% out of it. All right, other calls as well. SDS is a short the market ETF, so if you go long SDS, you're short the markets. I gave this out last Thursday just as the SPY hit that master level right here, and we're up very nicely on this position as well. All right, small caps continue to rock and roll. DHT was a great one yesterday, giving forth 35%, 36% profits from the swing trade alert. We've had great ones this month, including HIMX. HIMX I gave out right here. The Research Center members made money as it ran up multiple days in a row, giving forth about 40 to 50% profit, and there's plenty others. So again, the proof is always in the pudding, they say, and I'm a true believer in that as well, that when you look at the charts, you have to be able to see, are you making money? And at the end of the day, is your account bigger than it was yesterday? Was it bigger than it was last week, last month? And here at InTheMoneyStocks.com, it truly is. Members here, if you want to try it out, you take the 7-day free trial. You test us out. I'm a big believer that, again, we must show you what we do. We show our members what we do. they're with us for life as they make money hand over fist. So again, 7-day free trial to the Research Center, 7-day free trial to the intraday stock chat. Going back to the spiders, let's take a look. Markets seeming to bounce off this little area of support. These are support resistance levels in the charts, by the way. Every line you see here is either support or resistance. If you're above it, it's support. If you're below it, it's resistance. As you can see, you came right down here into support, and the market is bouncing a little bit. I'd be curious to see if the market goes back to the lows of the day. If it does, you'll have a nice double bottom pivot low. You can see right here, beautiful little pivot low right there, as the lows of the day were tagged earlier today, which coincided with this pivot point yesterday. If we get through the lows of the day, you're looking for the blue line, and then ultimately somewhere down here from the lows of yesterday. Again, the volume is not tremendous. It's a little bit better than yesterday, but it has been dying out all day. Therefore, it's hard to imagine the markets would really see any sort of major selling going on into the afternoon session. But again, the biggest thing that I'll be watching for is, do we close near the highs of the day or near the lows? And if you close near the lows, then it continues to show us that there is a change in character in this market that must be recognized. And again, that continues to tell me we should see more downside if that's the case. Now, if we go back to the highs of the day today, well, then that's all off the table. Then you have to start thinking, well, hey, listen, markets may push back to that 133.30, which, by the way, would be a fantastic double top. Let's take a look at some key charts on an intraday basis. I'm going to try to give you some setups here to watch for this afternoon. Let's start out with JP Morgan. JP Morgan, beautiful pullback into a necktie. Obviously, neckties are a perfect buying opportunity for a short-term intraday trade, but sure enough, the stock has already bounced off of it. Therefore, it would not be a play. You will have some resistance right here. Look at this beautiful little top area. Pivot high from today, pivot high right there. That's a great area to look for this afternoon for resistance on JPM. So that, again, would be your shorting level for a quick scalp on the afternoon session. If JP Morgan comes down to the 50 moving average, that will be your long opportunity right there. 50 moving average has not officially been tagged today, therefore it will be a long opportunity on a scalp play. All right. Take a look at Apple Computer. Now, Apple continues to show strength, being positive on a negative day in the markets. However, it definitely is at the lows of the day. And this is a classic in spirit of bearish pattern. All right, now again, who knows if it'll play out, but it is a bearish pattern. What I would look for is, does this pattern stay below the 50 and the 20? See how you're on the 50 and the 20 moving average? In fact, you're a little bit above. If it closes above in this candle, which has 6 minutes left in this 10-minute candle, and you can see it's popping right now, if it closes above, do not play the bearish pattern. If it closes below, it's still in play. All right, and this is good for you guys to start to learn these levels, learn these key charts, really understand what's going on here. All right, so again, right now you wouldn't play it. If it comes back in by the end of this candle and closes on that line or below, you can play the bear flag. All right, downside target, where would your downside target be? Clearly, this would be your target short term on Apple for a fall, which is at the 452 area. All right, if you close above the 20 moving average like we are trading right here, your first resistance would not be until this little pivot right here. This would be your first spot, and then your second spot would be right here. Okay? So those are your two levels on the upside. On the downside, this is your one support. Let's take a look at Amazon. Now, Amazon.com has earnings after the bell today. So that's going to be a big deal to this market. One thing of interest here, Amazon has come back into its good area of support. There actually might get a bounce. You might get a little bit of a bounce on Amazon here. What I'll do is I'll wait for the 200. If it comes down through this level to the 200, I'll play that. That's at 190, 130 for a scalp long. All right, if it gets through that level later today, then you're obviously going to have double bottom support. But remember, this is only an intraday trade as it has earnings after the bell. You would never want to be caught long or short going into earnings unless you know exactly what you're doing. And to be honest, no one that buys something long or short into earnings knows what they're doing unless they have insider information. In other words, it's not a 90% success rate trade or better, in which case I would never take it. All right, discipline is number one in this game. If you have the discipline, you will profit. It's that simple. All right, if you don't, then you lose. That simple as well. Remember, 7-day free trial to the InTheMoneyStocks Research Center, which is geared towards swing traders and day traders, but more so swing traders and people learning the proprietary techniques. And the intraday stock chat 7-day free trial also will rock your world as we give out day trading calls. Some good calls this morning, some great profits in my pocket as well as members' pockets from this morning's calls in the intraday stock chat. All right. Let's take a look at a couple other charts here. Let's go to Exxon. Exxon reported earnings this morning. The stock is getting hammered. I really don't see much of a play here on the intraday chart. You'll have a little bit of support at the lows of the day right here. If you start to move up, I don't think I'd look to short Exxon unless it hits the 50 moving average. Even at this pivot top, I mean, you'll have a minor level right here at this pivot, but it's not going to be good enough until you really hit this upper level there. Okay, And let's go on to just a couple more charts. I know MCP Molycorp was having a good morning, but look at that fall on Molycorp. Some of the rare earth stocks are having good days, though. And by the way, Molycorp, great support right here at the 200 moving average. You can see the bounce already occurring. But if you take this trend line right here, look at this. Isn't that cool? You have this pivot low and the 200 together. Therefore, you obviously know it's going to be a good trade, and you get a great bounce. But again, let's take a look at some of the other plays, the rare earth plays. REE, rare earth, rare elements, up about 90 cents to $7. That's well over 10%. AVL is another one. Avalon Rare Metals having a very good day, just up under 10% today. Some of the Chinese rare earths are also doing decently today. CHGS, this is the daily chart. You can see a little bit of a pop on that. And even SHZ, which is on my watch list, having a decent little pop. Good chart on that SHZ. All right. Let me just scan through a couple other charts here, see if there's anything of interest I want to bring forth. MasterCard's up about 3.5. IBM's down today, so that's weaker today. Research in Motion, let's take a look at that. That stock is down 43 cents. Yeah, Research in Motion, there's no trade on it right now. The only way I'd be a buyer on Research in Motion if it starts to retrace back down towards these lows. Somewhere in here, if the market really dumps out, it probably would go back to here. This is where I'd look for it, right around the $13 area. Start to really have some great double bottom support in that area if it got there. Plus, it's always a buyout possibility, so at those cheap levels, it probably would be a good risk-reward trade. Okay? Taking a look at a couple other stocks. Baidu today down about $3.50. Good fall on Baidu. Sina, which has been crazy in the whole Facebook craze, and a lot of these Facebook crazes, it's just amazing the run some of these things have had. Sina consolidating. This is bullish consolidation right here. I wouldn't be a buyer, though, just because, again, the moving average support area is all the way down here. That's too much of a distance to fall before you hit support, even though it is starting to make a bullish consolidation pattern. All right, in addition, you have gap fill right here, which is not that high up. See again how risk reward is easily calculated here. You have downside risk is all the way down here. Upside risk to resistance is just that far. To buy this and just for that a little bit of a distance to risk all that downside is not the smartest move. You wouldn't be the smartest cookie in the box or in the jar if you did that trade. Okay? So again, sit on the sidelines there. In that regard, let's take a look at U.S. Steel. U.S. Steel, great day today. U.S. Steel up $1.77. That's a fantastic move. Had a couple-day pullback into the 20 moving average, getting a boost. Be interesting to see if it goes to the 200 moving average up in this range. All right, let's go over a couple commodities out there. GLD is up 77 cents, but a good move off the highs of the day. This gapped up. You're still kind of thinking that, maybe gold gets up here. Either way, gold's going to fall in the not-too-distant future. Not a huge fall, but again, you just need a correction after such a big move up. Maybe it gets up to this yellow line. We'll watch that one very closely. And then SLV, which is silver. Great reversal on this. This stock is more into some resistance. There was a nice gap fill right here that occurred, and you can see you've kind of been hovering right into that range. Here's your gap fill. Let me draw that line across. And again, notice the pullback off that area. Okay? Scanning through the USO. USO had a great gap up today, but what an epic collapse. This is the intraday chart I'm going to show you now of the USO, which is the oil ETF. And again, look at the gap up and look at the collapse. It's getting a little bit of a bounce here, but still not pretty in terms of the reversal. I still think oil's going to head a little bit lower just based on the fact that, again, there's a master on the daily chart trend line right here. And once you failed, you got above it right here, and then you failed, and you've never closed back above it. So therefore, you have to favor the downside on the charts. All right, guys, again, 7-day free trial to InTheMoneyStocks.com. We teach you proprietary methods. We give you swing trades with, again, a 90% success rate on our trades. And it's just been an unbelievable January 2012 so far. We took another profit today. We took a profit yesterday on a swing trade given in the Research Center. It's there for the taking. You just have to step up and do the hard thing of taking a free trial. I know it sounds pretty wild and crazy, but I'm sure many of us could handle a free trial. Come to us. We'll teach you how to be an elite pro and make money better than any hedge fund out there. Take care, guys.